Welcome, dear traders. Yesterday's US trading and early Wednesday's Asian session were very positive for stock indexes. As a result, stocks in Australia and mainland China posted strong gains, while Japan's Nikkei soared by more than 2%. Economic reports from the United States, Japan and China were the main drivers of the growth. The US Consumer Price Index was lower than expected. The easing of price pressures was expected to strengthen the prospects for a dovish return by the US regulator. In the Asia-Pacific region, risk sentiment continued to strengthen amid fresh reports on the Japanese and Chinese economies. Even more impressive was how currencies reacted to the weaker US inflation data. The data pushed the almighty dollar to its weakest level since early September. Its price against a basket of 6 major counterparts dropped by 1.5%, rolling back to the support level of 104 points. Expectations of the US Federal Reserve to raise interest rates also weighed on the US Treasury yield. The US dollar index was hovering within the boundaries of 104.00 and 104.20. It may move even lower today when the US published data on the producer price index and retail sales. If the reports are in line with the forecast or even weaker, the pressure on the US dollar will likely increase. In addition, some investors are already anticipating aggressive interest rate cuts in 2024. This means that the current market moves may gain momentum and consolidate in the near future. Meanwhile, the greenback has depreciated the most against the Aussie. The US dollar index is consolidating near 104.10. Despite the weakness, the US dollar continues to resist the depreciated yen. This is especially true as the Japanese economy is in a recession, according to preliminary third quarter data. The GDP figure released today showed a decline of 0.5%. This could be the first contraction in a GDP since the fourth quarter of 2022. Today, Japanese Economy Minister Yasutoshi Nishimura commented on the expectations of a low GDP level. He emphasized that domestic demand, consumption and investment were weak in the third quarter, and this is mainly due to the strong price pressures and rising global factors. In the long run, the Japanese currency will face more problems. On the other hand, weaker US inflation data will keep the dollar-yen pair from a strong growth. Against this backdrop, the Bank of Japan may refrain from interventions in the forex market. And today, the yen traded below 150 and 60 in the Asian session, although the main impulse of the pair is still bullish. Its daily price is moving in a narrow range of 150.20 and 150.80, showing moderate volatility. The Australian dollar also began Wednesday's trading moderately within a range of 0.6483 and 0.6513. However, the Aussie has a different situation. It's enough to pay attention to its steep rally after yesterday's reports on inflation in the United States. The Australian dollar benefited from improved risk sentiment, rise in oil prices and the weaker greenback, which showed its worst daily performance since November 2022. Meanwhile, the Aussie may surge in the next couple of hours. Today, the currency consolidated on the gained height near 0.65. The strengthening of the yuan was another growth factor for the Australian and New Zealand dollars. The Chinese currency rose to its strongest level in more than 2 months. In addition, the yuan was supported not only by weak US inflation data, but also by domestic statistics. Today's reports showed that China's industrial production gained 4.6% in October, and this was the highest yearly increase in industrial production since April. Early Wednesday, the New Zealand dollar also edged higher, trading within the range of 0.6000 and 0.6040 after breaching a key resistance level over 0.60. The Kiwi closed the Asian session consolidating near 0.6020. The Indian rupee showed confident trading today, and the decline in the US Treasury yields and the dollar's retreat helped the Indian currency recover to around 83.10. However, yesterday's domestic wholesale price index showed that the country was in a deflationary territory for several consecutive months. Moreover, as the world's third largest oil consumer, India remains vulnerable to rising oil prices. Notably, the country's central bank has held interest rates unchanged for 4 consecutive meetings. The regulator is limiting rupee depreciation by intervening in the foreign exchange market. The rupee-euro pair has risen to 90.40 from 87.90 since early November. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you online soon.